sitting in the airport and every flight was going to Florida. And she's like, look at all these people. We're going to Florida to find a house to live in there and they're going to stay. She hates the traffic. The traffic's everywhere. It's driving her crazy. You be nice to them. They make our taxes so that we don't have state taxes. Let them move.
You know, the same people were saying that about her. That are like, oh, this young girl moving into Tampa, Florida.
Everybody's looking at each other like, look at all these people.
Yeah.
Come to our state.
Yeah, exactly.
Hey, you're welcome to our state, man. Go to Disney World, spend a lot of money, have a good time, just so I don't have to pay state taxes? Shoot. Bring it on, baby. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Good. Market is making its way back here. I've been gone for a couple days, and just as always happens, I leave, market falls, I come back, market goes up. So I'm going to leave for a few days again because I liked it when the market was falling there. Now I was away. I had an event that I got to, last minute opportunity to go to with my daughter, so I wanted to do that. And I'm here, happy. Thanks for all the emails. I got a ton of emails, actually. Where you been? Where's it going? Tell me what's going on. I'm happy you're watching, so I appreciate you guys being here. Our Wine and Wealth class this week, we're going to talk about portfolio changes. It is time, right? We've been waiting for this pullback. We're getting this pullback, and so we're going to go shopping, essentially. And so I want to go over some of that. I'll go over the general stuff in the beginning, and then stick around and answer all the detailed questions as long as you guys have. And then next week, our Wine and Wealth class will be the biggest announcement ever from a financial advisor, something that none of them have ever attempted to do. And we are going to do it, and it is ready to go. I've been teasing this, since about the beginning of the year. We're ready to announce that, so that'll be next week for our Wine and Wealth. You did not want to miss that one. If I could get you to not miss one, that would be it. Anyways, if you look at the stock market today, off to the right-hand side of your page, you got a little bit of a rally. It was like chaos over the last couple days. You had commodity chaos, gold chaos, nickel chaos. They closed the freaking futures exchange. That's very rare. That never happens. Oil off to the races. I literally watched it where this gas station where we were staying, they went from $3.99 a gallon. The very next day, you have to pass the gas station. So it's like I saw it one day. Next day, I passed it again. $4.39, just like that. That's a pretty severe jump right there. The market has its worst day year to date there. Nasdaq's in bear market. All of this kind of just coming down at the same time. You would be right to say, should I be a little worried about this? That's kind of interesting there. That doesn't normally happen. Oil, the price of oil. Let me just jump around a little bit here. The price of oil, what was it, 2 days ago? So oil's up 8%, down 8%, up 8.5%, down 8.5%, finishes up only 4%. Wheat was up 5%, down 12%, up 12%, minus 9%, and plus 9% just before lunch. So that's not even like the whole day. That's what wheat did in an entire day. So incredible there. Palladium had multiple swings of 8% plus and minus, back and forth and back and forth. If you didn't know, I think I covered this before. Palladium, 40% of the world production comes from Russia. So palladium is going to get a little bit hit there. Aluminum, also wild there. So commodities that people don't even normally look at were like all of a sudden just wiggling around, not to mention the stock market there. As far as aluminum, palladium, and things like that, wheat, you're talking about big bucks that the producers of these products are going to get to make if they can get lines of credits from the bank to withstand the margin calls. That could be a separate video or something, but remember that corporate credit is drying up out there. So there are tons of money, tons of dollars to be made by wheat producers just from the futures contracts that they hold, palladium, nickel, etc. But they're going to have to get lines of credit. And you started to see that a little bit today. Banks are going to choose favorites there because they can't lend out all that money. That's a lot of money. So expect more volume there because there's going to be more transactions happening in there. Banks are just not as inclined to take the same level of risk as they were before. Also, yeah, you got a little bit of a rally here today. The market's obviously doing their thing, looking really good. But tomorrow we get inflation numbers. They're going to be high, right? Does anybody think inflation's going to be lower? Like, would you not think that's suspect if all of a sudden, or as the kids would say, sus? Do they still say that?
Yeah.
They say that. Okay. I won't say it anymore, but I heard a kid say that. It was on a song or something like that. That's suspect, right? If all of a sudden inflation's falling, but we can all see it shouldn't be falling. So that's probably going to be a mess tomorrow, and maybe priced in. I don't know. So we'll see what happens there. If we look at the S&P 500 here for the day, obviously stock prices, valuations are all moving lower here, recent lows. We talked about this the other day with the downtrend pulling away, and I drew the lines here to show you and said, well, look, everything just going to make its way back up there. In no beautiful imagination do you think that this is going to break above the downtrend, magically go back to highs, and everything's going to be fine? Paint me a picture of a scenario where that could happen. What happens there? Not to mention that the president of Ukraine, now this is related to the market, otherwise, you can have your politics fun, but is he not asking for it? Like, it feels like his days are numbered, and you know that that's going to have an impact on the market too if all of a sudden they bomb an area and he happens to be in there and he's taken out. So I hope that doesn't happen. It seems like a kind of an interesting character, but you have that. So you have so many things that could beat the market down, although today looked really good, right? You have so many things that could beat the market down. There is no scenario that puts, unless the whole world just comes together and we just forget this all happened, there's no scenario where the market just goes back to all-time highs. So if you feel like now's the time to do some shopping, maybe it is, right? But it's not time to run away and say, well, this is it. I withstood this decline here. I'm just going to walk away. I swear, I was just out back here. Right behind this here is a door. You go outside. And I heard a lady pacing. She was talking to Fidelity. This is a true story, Cody, I swear. So this lady was pacing. She was yelling, so it caught my attention. And she was saying, I want to sell all my stock and go to cash. And they wouldn't do it for whatever reason. She couldn't verify her account. She was yelling at this person, and it was her 401k. She was like, it's a 401k, and I want to go to cash. And I was thinking, she saw the bounce today, and she's like, that's it. I can't take it anymore. I want out. Probably bad timing on her part. I didn't interject, but I'm like, it's probably bad timing. Not to mention, here's a fun one. Today is the 13th anniversary of the 2009 market bottom. The guy on CNBC who passed away a few years ago, he actually called it intraday. He called the bottom of the market. He said, this has got to be the bottom right here. Well, that was exactly 13 years ago there. Can you name a stock that has been in the top 5 in terms of performance since the 2009 bottom? Like if you just pick a stock and go, that stock has had the best performance since 2009 bottom. I'll cover that in a second. Give the stream a second to catch up. But there are, there's not many names you would probably guess, by the way. But all popular names, I'm just saying, you probably wouldn't guess them there. So let's see what you guys come up with there. All right, I want to cover this real quick. The VIX. Have you seen the VIX? We talk about this here and there when it spikes and when it falls and stuff, but day to day it's not interesting. The VIX is now closed above $30 there for 7 days in a row. There's only 16 other times in history that that's happened. It's very, very rare. What's even not as rare, but what's really interesting here is VIX is what's known as being in contango. We don't talk about futures much here, but you'll notice that when I reference gold or when I reference the bonds or something, I'm always looking at the futures, as you can see by the contracts up above there. The VIX is in contango, and that's just a fancy way of saying that the front month contract is currently more expensive than the back month contract. In other words, the risk is right now. The risk is not later. If you think about it like interest rates, a bank is willing to loan you money for less money now because there's perceivably less risk that you'll default in a short amount of time. But if you ask them to loan you money for 30 years, interest rate goes up because we don't know what could happen in 30 years, right? So there's a difference there. Well, in volatility, usually what happens is the risk is low right now, but the risk is high later, and that makes perfect sense. Right now, it's the exact opposite. There is a 2-point spread between the front month futures contracts and back month futures contracts there. That is actually quite rare. So I want to share with you a quick little performance of the stock market because you want to pay attention to this. Following contango extremes, and that's just my word. I'm not saying 2 points is extreme, but for the moment it is actually extreme. So notice that when there's a extreme contango, and I'm just going to say it that way, that over the coming month, right, days, weeks, and months, just because I put them out that way, there's not much to write home about, meaning the S&P does not perform any better or any worse than it would normally do. So we show in blue what happens over the next week when you reach those contango extremes. Not much, back and forth. Whereas in any other time period, the market gains about 0.2%. Over the next month, when you have that contango extreme, about a 0.5% gain, but the market gains 0.7% normally. Right? So it's not outperforming the market. However, that changes after 3 months, 6 months, and a year. There is severe outperformance in the S&P when there's an extreme contango when you're looking at VIX futures. And so it's a really, really geeky way to show that when there's a lot of volatility in the ultra short term and people believe that it is short term, that the stock market tends to perform well. There's going to be a while of seeing a lot of sloppiness, right? A lot of underperformance and nothing too exciting. But you go 3 months out, 6 months out, and things start settling back down or at least finding their footing, then you have a reason to believe the S&P will outperform itself over that time period there. So just a quick one that I wanted to share with you. Hopefully that helps. If we look at the Nasdaq, are we going to look at the Nasdaq? What's going to happen? There we go. So the Nasdaq's in a very similar spot here. However, it did hit a bear market while I was gone. That means it's down 20%. A bear market is referenced as 20% from the previous high to whatever low it happens to make. So that's what we have there. You also have higher volatility. Oh, there's my line. It popped up. So you have higher volatility here in the Nasdaq, and we've talked about this downtrend being steeper than normal. So you have a steeper, more extended drop in the Nasdaq that happens to hit a bear market at that time, right about the same level there. It's time to go shopping, right? It's time to look for ideas inside of there. And here's an example of that for you. After hitting a bear market, what does the Nasdaq tend to do? So we looked out a week from the time that it hits a bear market, and it had to be the first time that it hit bear market. So in other words, it couldn't go down 20%, bounce a percent for a day, then go down 20% again. We didn't count those. So from the very first time there, 1 week, not bad. You got at least an attempt at a rally. We got twice that just today. So that stat is holding more than true at the moment. Over 1 month, there's not really much exciting there. In other words, you didn't miss the bottom, right? The lesson there is if you see the market today bouncing and you go, oh my gosh, I missed it. I should have put more money in. You very likely did not miss the bottom. There is going to be a lot of chop back and forth. As you can see, over the next 1 month, there's going to be a lot of good days, a lot of bad days, but it's not going to outperform itself, in this case, referencing the Nasdaq. But as you settle down 3 months, 6 months, and a year out, whenever we hit a bear market, that proves to be a buying opportunity. Not right away. There's no hurry. Don't call me today and say, let's buy, let's buy, let's buy. You have plenty of time. And when I say it's time to go shopping, I mean it's time to put your mind right. Time to find what you're looking for. How do you want to build your portfolio? What do you want to have over the next year or two if you're a long-term investor? So never, ever, ever let one day in the stock market tell you or make you feel like, I've got to dive in. I just got to make this happen. This is incredible. I'm going to miss it. This is going to be the end of the thing there, right? Don't feel that way. And there's the stats basically to back it up. All right, I want to touch on a couple other things. Crude oil, ridiculous. Why? What a move. I mean, it's great to see it falling today, down 11% on the day, $14 a barrel for that. Now, what you're going to hear if oil stays high like this, although it seems like a bargain today relative to the last 2 days, you're going to hear of oil causing a recession. And I started talking about that the other day. You get the idea of why people say that, right? Is if you have to spend X number of dollars more on gasoline, you need gasoline to get to work and do your thing. So you may not spend as much money, going out to dinner or, buying something extra at Target or whatever it may be. You may just actually have to spend money on gas to keep your life afloat there. So that's a valid argument, right? Now, we have a unique situation here where commodities as a whole are more expensive. Nickel will make, obviously, these battery-powered cars and everything that were battery-powered these days have some issues there. We also have, of course, let's just show it, the price of gas. We had a new record. There you go. Here's the national gas prices, retail pricing here. And so we're at about $4.19 nationally. We're more than that here in Florida, and I think a lot of you would probably say it's probably higher. This may be a day behind, actually. Nonetheless, this is the extreme. This is as high as we've ever been. What I did is I put in gray in the background, I put the prior recessions. Could we say that oil hitting a new high causes a recession? It happens to look that way. However, recessions typically had already started. Now, what the tough part is, we could deem right now a recession once we have the data, and this gray bar would actually go back in time to show the recession. So it's a little lagging indicator here, of course. But higher prices of oil do, in fact, eventually cause a recession. The only time it did not was during COVID, and that's because we didn't have high gas prices. We had a global pandemic, right? So we stopped buying gas because we all had to stay at home. So it's a different story there. Other than that, recessions are caused by high prices or extreme prices in oil. There's a couple differences this time, and I can't just blindly say, oh, we're headed for a recession because oil is high. I mean, very much is going to get that way. But we've got gas at the highest price ever here. One issue that I have is that there's more money out there in percentage terms than's ever been out there, meaning more money was thrown into the economy during COVID than has ever been thrown in at that fast of a pace. I could probably show it. It's going to mess my chart up here a little bit, but it's okay. So it's one way to look at it. So here's in the black is still the price of gas, right? Now in the orange line, we're actually showing the money supply, the addition to the money supply. And so over time, yeah, we're adding more money, inflation, blah, 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 right? So we're moving along. All of a sudden COVID hits. Look at the speed of the increase in the world money, or in the US money supply. That's a lot, right? That's what, we're sitting here at about 16 trillion. We go up to $21 trillion. So let's just call it $5 trillion added over the course of a year and I'd say 2 years just to make it easy, right? Never happened before. That's never happened. That money is still out there in circulation. A lot of you are finding you have extra dollars at the moment. You don't mind so much. It's, you know, a little extra gas or whatever, but that's going to dry up. That's not going to stay that way. So I have issues with that this time in terms of when it causes the recession, but no doubt, you know, that's an issue. One other issue I have real quick is the clean energy argument, right? For or against it, doesn't matter where you stand there, but did you know that, let's see, ICLN, an ETF that's become quite popular for the clean energy crowd there, up 16% since Russia invaded Ukraine. Now, there's a move or the presumption of a move where people will say, okay, if gas prices are going to be high, I'll just go buy a battery car or move towards, you know, clean energy type products, or maybe producers will move more quickly towards that. Maybe, maybe not. Western nations can't actually exclude oil coming from Russia 100%. Like as much as everybody wants to cut them off and everything, oil, natural gas, they can't. It's just not possible to exclude Russia 100% forever. So that's a problem there. But if everybody starts making that move, like we're already kind of doing, going to battery cars and some battery planes out there and stuff, a move to clean energy does solve that problem of paying higher gas prices. But then what does that do to gas? That's just going to make gas prices come back down. So do we not have a yo-yo effect going on here over the long run? I'm not saying, you know, that you should bet on something now, but there's a few key things there where I say I don't know that this time, you know, high oil prices causes a recession because people are already willing to go to a battery-powered car, and as long as we don't jack up those prices or have any problems there, they're kind of already willing to make the switch. So is it a problem? We'll see. And that's a tough one. I don't know the answer there. I just think that's a variable that has to be considered this time. All right. Sorry. We'll go over here. Office trades. I'll be honest, not much has happened there. Whenever the markets get volatile, we do put a little priority towards, of course, our main business, what we're here for. It doesn't matter because we got crushed on Monday. Today looks impressive in terms of the rally, but we are definitely fighting a battle here with some of these positions. I did close out a handful of them today. Just because the rally, obviously, you know, if people want to buy, you give them something to buy. I did roll the Pepsi Pepsi puts forward. Got the 160 puts on that one. Rolled it forward for $1.97 more. Closed out 3M. It was a 30% profit on the premium collected there. I was looking for a way to free up capital because there's a lot of other cool things to do, and I wanted to come back here now that I'm back and have some money to put to work. So I closed out the Dow $60 puts. That was about 32% return on the premium that we collected there. SWKS closed out the 125 puts there. That was about a 28% premium credit on the premium that we collected. And State Street, I should have closed that the very, very first day that it popped. Had to wait through the market decline there. Those were the $75 puts. Closed that out for about 33% of the total premium that we had collected. Not the norm for me, what I would do there, but I was freeing up money so we can now go back to work on all kinds of other stuff because it is, for the short-term trader, there's a lot to do out there right now, and I wanted to have some dollars. Not to mention, my wife apparently took money from the wrong account, so our account has less money in it now. So we'll have to fix that because I just noticed that actually. Anyways, I will fix that. All right, let's go to new highs and new lows here. There were only 5, so those 5, what you see on the screen is all they have. There were 3 new highs, 2 new lows, and I don't have a whole lot to gain from it. Dollar Tree's got a big shake up on the board there, so a lot of activity here in the short term. Probably good if you read through it a little bit. It would be more beneficial for them over the long run. Going to be tough in the short term to really start a new position there. WRB, which is not on the screen. There you go. Okay. WRB did not hit new highs, but if you have a scanner, it's going to show that. So it's not a mistake. Their split took effect. 3-for-2 stock split that actually took effect today, so you're looking at $91 a share. That's actually not a new high. Welltower, sorry. Welltower. Why did I say Wellcare? Hit new highs, breaking out of a range. That might be kind of interesting there. And then your only two new lows are Clorox, which is a known weak stock at the moment, just breaking down to new lows, getting bombarded here. And Kimberly-Clark getting very extended in the short term there. I believe they are also going to stop servicing or stop dealing with Russia. A lot of that came out. McDonald's and Cody, what was it? McDonald's and Amazon.
Jazz, Pepsi,
Jazz,
Starbucks. Yeah.
Oh, yeah,
Amazon.
we are going to stop in Russia, that's for sure.
PlayStation.
Pepsi.
Or Sony. Pepsi, Starbucks.
Oh, Starbucks.
McDonald's.
I saw McDonald's says, well, it's going to cost us $50 million a day, but, you know, we're going to do it. And then Pepsi wasn't going to do it for a while, and then they said, yeah, we're gonna go ahead and do it. I saw that when I was on the plane, and I looked at my daughter, and I'm like, if I was in Russia right now, and they just told me, no more Pepsi, there's not like an amount I wouldn't pay. Like, I'd be out there scooping them.
You know what's funny is I didn't think anything of it, but for you, that's a big deal.
Oh, I mean, you talk about some mean people that are not getting there. I don't know if they like soda as much over there, but holy cow, you take that away from me. Those are fighting words right there. All right, stocks in the news. Ta-da. All right, so you got General Electric. Stock ended up 3.5% higher on the day. They're doing an accelerated stock buyback, $3 billion. It is. They approved the $3 billion there. Okay, so that's that. Campbell Soup, wild day the other day. They missed on sales. So the bottom line, if you look at their earnings, they beat on earnings. Sales were the problem there for them. Kept their guidance the same, and people were like, what? How do you not want to fight back from that? So a little bit of weakness there. PayPal, that they were in the news. They're going to stop service in Russia, so another company just kind of getting on that bandwagon there. Stitch Fix in some real problems here. It finished down 6% today. Lots of volume there on Stitch Fix. They lowered their guidance going forward. They have some real growth problems. If you ever want to look into Stitch Fix, you know, or maybe you're a member and you get the clothes delivered to you, where are they going? That's one of those companies I like to read about and just see, because it's a subscription-based business, but it's a public company. It's like, what? How is this going? I'm not sure I understand. They've got some hurdles to jump over, would be the easy way to say it. XPO Logistics, they are going to officially be just XPO Transport, right? Not that they're changing their name, but they're getting rid of the brokerage side of their business. They're going to just focus on transports only. The market loved that, up 13% on the day. Other than that, you've got some straggler earnings there. Ulta, which is happens to be one of the best performers since the 2009 bottom. Ulta Beauty gained a total of 8,268%, or an annualized return of 40.6% since 2009 when we hit the bottom. The first place winner was Dexcom, 44% annual returns, 11,400% change since that bottom. Second place is Nvidia, by the way. Nvidia with a 10,268% gain since the bottom of the 2009 market, 42%. The only name, which was fifth place, that did not generate 40% annualized returns was Domino's Pizza. It gained 6,761%, or an annualized return of 38.4%. Anyways, Ulta is going to be reporting tomorrow. It could be a mess on earnings, so careful there if you're an earnings trader. Zumi's going to report as well, Oracle, DocuSign, and that's pretty much it. You've got natural gas inventory numbers coming out tomorrow, and inflation in the morning. What's going on with inflation, ladies and gents? If you had to bet, you know what I mean? If you just had to bet, what would you think? All right, I'll take your questions if you happen to have any, and then I got to get back to work and do my thing here. We'll see what we can do. Yeah, there you go. How do you fix this oil problem, man? Seems to welcome Russia back in to fix this. I can think of a few things. They're just highly political here in the States for some reason. But there has to be something more to it than what I understand. But don't we have the ability to kind of do that here? Where's the domestic problem? Let's solve that. The one closing not to beat the closing beat not to miss, and I'll be missing it. Oh boy. Sorry, man. Harry, actually, I saw, was it Chevron's CEO? Yeah, I believe it was Chevron that, everybody kind of says, well, let's drill here in the States. Let's drill here in the States. All right, good idea, but that doesn't fix our problem right now. And I think he was calling for work a deal with these guys here to release as much of the oil reserves as you can, while over time they work to replenish those reserves. You don't just pluck oil out of the ground, refine it, get it ready for use, and then it's just available the next day. So that's one part I think people are missing. And it's kind of like what's happening in Florida. There's a bill, an amendment to a bill that everybody in Florida is like, oh my God, it's the worst thing ever. But they're missing a key point, and everybody's just trying to get excited about nothing. Anyways, there's your politics. Paul's got $52 to fill up the old Kia. Yeah. Anybody have that, like a big truck or something, and you have that problem where you put your card in? This used to happen to us when I had a boat. We'd put your card in and you start filling up the boat, and it's going to be hundreds of dollars, and then the card shuts off because it's like, nope, that's as much as you can spend in one shot. Are we getting back to those days where some of you guys with the big trucks are like, you got to pre-approve a charge for $150 to get gas? Thoughts on Amazon stock split? They were next. Yep. So as far like thoughts on good or bad, I'm all for it. I like a lower price stock. I'd rather have more shares at a lower price than have less shares at a higher price. It's just personal preference. Obviously, notionally, it makes no difference. But yeah, I don't have any complaints about it or anything. That's fine. Makes perfect sense to me. Andrew says, the question is, what month the numbers are comparing to last year and what was happening then? Oh, what did I miss? You might have to help me on that question. I can't think of what I'd be missing there, but I'm happy to answer if I can get on the same page with you. I'm sorry if I missed any questions here. When you start managing everyone's 401ks, that's happening now, actually. Yeah. So I've been going through everybody little by little, and that's live. That's working. Yeah. That is officially up and running. That's not the big surprise, by the way. 2 weeks. Not this Thursday, but next Thursday. I'll share with you. Oil companies are, in fact, not slowing production. Some of the smaller regional guys are, but they're not necessarily slowing production. They're just saying, we're not going to expand production. We're just going to enjoy these big prices here and try to soak this up. They're saving their dough. Some of them paying out higher dividends and such, but yeah, they made that bet. I think everybody but Occidental Petroleum had made that bet, and ExxonMobil. They said, we're just going to hang tight. You know? Oh, man. There's all the gas prices. I'm seeing it. Yeah. Say something nice about gold. Well, you got your pop. So here you go. I'll say something nice about it. So remember, all through here, inflation was already 6 and 7%, and everybody's like, I'm going to buy gold. I was wrong. Gold actually eventually did take off. It took a war, but gold was not a very good hedge in here. And now your patience would have paid off if you were sitting there waiting for gold to act as a hedge. I would argue it's extended here, and maybe you think like, hey, a hedge worked out. Let's just now stop using that hedge. But that's it. Referring to inflation data. So inflation, the headline number gets reported in 2 ways. So the first is the change, the in basis points. So if inflation goes up from the last report of say 0.3%, you'll see inflation's up 0.3%. And then the big number where you see the 8% or 7% or whatever, that's the year over year change. So those are the 2 numbers that you'll see tomorrow. And then there's actually a second one. It's called core CPI. Which is basically stripping out the volatile products. That's how we all say it, like your gas and stuff like that. So it's more of think of it as like your consumer staples type inflation numbers, but those are going to be higher too. Yeah. Cody should post a short video when I'm gone so people don't worry about you. So Cody can be gone as much as he likes.
Agreed.
But no video. But if I leave, video.
I think it's fair.
You got to tell him a joke too. Got to tell him a joke for that one. All right, so we'll do that one. Can't sign in the dojo. You don't have a cell phone. Use a well. If you can't sign into the dojo, then you can't sign into your account, and you could never have opened an account anyways. So something's changed there. Help me out with that one, because you can use Google Authenticator. We actually prefer that, but that means something has changed in your life. You had one, and maybe now you don't. Which I think, if that's the case, we can take away the feature of you being able to download any sensitive information and just make it back the way it was, maybe? If that helps you? Let us know, though. We'll figure that one out. Yep. Okay. So Andrew, so to follow up there, so you're seeing February 21 compared to February 22. The year-over-year change number, the big number, is going to be the year-over-year change. Yep. Yep. We should have gone nuclear when we had the chance. Well, I think China did. So China's like on a nuclear power plant tear over there. They are building them quickly. I watched a documentary on that, how the world went to nuclear power, then back away, and Chernobyl and all that, and then they went back to it, and then away, and Japan, and that was kind of fascinating. A little bit of a history lesson there. Oh, I don't know. Can the yuan become the reserve currency? I don't know. Foreign exchange, not my cup of tea. What do you think of XLF lower the market the last month? Rates about to go higher. So remember, the financials, especially the regionals, you're talking about the larger big banks at the moment, but the regional banks really took off in anticipation of the higher rates. Now we already know, and the bond market's officially priced it in. So that's your reset here. That's not like, catastrophe. It's a viable pullback. It's definitely something interesting. But when the bond market over here prices in rates, this is all this right here. So rates moving higher, bond prices moving lower. They priced in 5 rate hikes already. So that means financials priced in those rate hikes already. Well, now that's it, right? What do we do now? We've now overpriced financials. So that's all that happened there. That's not I don't see the XLF lower as a problem. Yeah. Oh, yeah. Cool. Well, I have talked your ear off a little bit longer here. I wanted to spend a few minutes extra with you because I did miss the last day or two. We'll be back tomorrow, of course, to do this all over again. And you know where to find me if you need anything. Wish you a good rest of your day. Let's see what tomorrow has. It's going to be exciting. I know tomorrow will be an exciting day because of inflation numbers. And, well, there's a few things going on around the world. So we'll see what happens there. Enjoy the rest of your day, and adios.